Is the stock market about to crash? Well, it's a concern that some may have given the price action in NVIDIA last week. We can see here on screen a chart of NVIDIA. This is a 3-year weekly chart. And notice that the trend went parabolic. And so when a trend goes parabolic and you hit a new high and close below the open, like we did this week, it often brings a pullback in that stock or market. And so it's quite likely that we'll see NVIDIA pull back. Now that's important because much of the strength in the overall market can be attributed to NVIDIA and some of the other high-flying tech stocks that have sort of pulled the index higher. Now, why does that happen? Well, indexes like the S&P 500 and the NASDAQ 100 are market-weighted indexes, which means they are more heavily weighted to the biggest companies in the index. And NVIDIA is now the biggest company on both of those indexes. And so when you look at a chart of the S&P or of the NASDAQ, when you hear these statistics about these markets hitting new highs and really having great performance for the year, it's largely because of a very small handful of stocks. NVIDIA, Apple, Amazon, Microsoft, these large cap tech stocks that have some business in the artificial intelligence space. And so I guess the concern is that if NVIDIA pulls back, if Apple pulls back, if Microsoft pulls back, it will cause wider weakness in the market. Now, here are my thoughts on that. I actually don't think that that's going to happen. I do think that there's a good chance that we're going to see a pullback in these large cap tech stocks, particularly NVIDIA. It doesn't mean that they're going to go down a lot, but simply make a pullback to more rational levels. And so if we look at the chart here, that linear trend line means that a pullback in NVIDIA to 100 to 110 would be reasonable and might actually present a buying opportunity. The question is, will that bring the whole market down? Well, it might very well bring the S&P 500 down if we take a look at SPY. And again, keeping in mind that this is heavily influenced by these large cap stocks, if those big companies pull back, then we could see a little pullback in the index like we had back in April. However, I don't think that's going to mean widespread selling. In fact, to the contrary, I think we may see money flow into the rest of the market. So what I'm going to do now is show you a chart of the S&P 500, but on an equal weighted basis. What that means is every company in the index now has the same weighting. Whereas NVIDIA has a very large weighting, in this index, NVIDIA's got the same weighting as any other company listed in the S&P 500. You can see the difference here. Where the S&P 500, the normal index, is going to new highs and has been trending up for a while, the basic S&P 500, if you look at all of the companies, has really just been going sideways for the last 3 months. And so what may happen is we may see money move out of these large cap tech stocks and flow into the broader market. And there's a very good reason for that, which I'm going to show later in the video when we look at the bond market. But for now, let's just assume that we're probably going to see some weakness in those high-flying AI stocks, NVIDIA, Apple, Microsoft, etc. And then maybe a little bit of money flowing into the smaller companies that make up these indexes. Now, let's do our normal market analysis at this point, because this is going to lead into that argument for why we may see some strength in the broader market. So first of all, here's the S&P 500 again. I'm just going to pull up SPY and look at a shorter term chart, and you can see a little bit of weakness at the end of the week last week. It's still in a bull trend. If we see this upward trend line get broken next week, then I think there's a good chance we're going to get a little more selling pressure in the index. Again, that doesn't necessarily mean every stock, because most stocks really haven't been doing that well over the last few months. Most of the market has been going sideways or even downward, while the indexes have been propped up by those large cap tech stocks. Let's take a look at the NASDAQ 100, QQQ, and there you can see this parabolic move. Here's the linear trend line, and I expect that we'll see the NASDAQ pull down to that linear trend line, much as what happened back then, where here you see it again. It runs away from the trend line, it pulls back. It runs away, it pulls back, it runs away. It's probably due for a pullback again. If we look at the short-term chart, the 1 month, you can see a little bit of weakness there, but we haven't really broken the longer-term trend line, which is there. We just broke this short-term one, and so I think we're probably going to come back to that trend line, right around 465, 470 on the QQQ. Now the Russell 2000 IWM is a little better representation of what's going on with most stocks. Here you can see that most stocks really haven't done all that well in the last 6 months. And in the last 6 weeks, we've actually seen the market moving lower. I think that's going to change. I think you're going to see the IWM start to move up. And if I draw a little trend line here, across those lows, you can see that we've pulled back to the trend line. And I think we could get a little summer rally in the broader market at the expense of those large cap stocks. And again, I'll show you another chart in a moment that explains why that's likely to happen. But first, let's take a look at the Canadian market, T.XIU. And there you can see weakness here, and much of that due to some pullback in the commodity stocks, although oil is looking better. We're going to look at that in just a moment. So there you can see a little bit of weakness in the Canadian market. If we look at the short-term chart, 1 month, general downward trend. So fairly bearish in the short term on the Canadian stock market. Let's take a look at gold and oil. Here we see gold over the last 4 or 5 weeks has been pulling back, but it had a really strong run. And again, going back to that principle of linear trend lines, when you run away from the trend line, you typically pull back to the trend line. And that's what we see likely happening in gold. How about oil? USO is a good symbol for oil. And this week we break the pullback that we've been in for 2 months. We break it there. That means we're likely headed up towards that resistance level. So a decent upside, maybe 80 to 83, 6 or 7% upside on oil. If you look at the short-term chart, you can see real weakness here, and then we built a rising bottom and broke up from a rising bottom, and that's telegraphed that upward move. And I think there's probably a little bit more of an upward move in the price of oil in the near term, and that could bring some opportunity in those energy stocks. Before we get to the bond market, let's take a look at currencies. Here's Bitcoin, which has been really going sideways for the last 4 months. If you look at the short-term chart, it's broken down a little bit. So we had some support here. We're building falling tops, and that indicates Bitcoin probably likely to pull back a little more in the short term. The long-term trend is still okay. What about the US dollar? Let's take a look at that short-term chart on US dollar, and generally moving up as the market begins to think about a drop in interest rates. We haven't seen that yet, and so the market on the US dollar is still moving up because the Fed basically said we're not going to raise rates anytime soon. However, the bond market is predicting otherwise. The bond market is saying we are starting to look toward a drop in interest rates, because remember, if the bond market is going up, that means interest rates are going down. And so we've seen bond market climbing over the last month. Therefore, interest rates have been falling in the bond market. I'm not talking about what the central banks do, but rather what the market predicts in terms of bond market pricing. And so interest rates have been falling, and that's why I think we're going to see a rotation into those smaller cap, broader market stocks, because they're much more interest rate sensitive. Interest rates have meant nothing to NVIDIA, to Apple, to Microsoft. Those companies don't seem to be affected by interest rates. But the broader market, the economy in general, has been slowing because of the high interest rate policy that central banks have shown. Now, in the last couple of weeks, we've seen the Canadian Central Bank, the European Central Bank, lower rates. The US Fed didn't follow, right? They kept rates as is. But the bond market is speculating that that will change. And I think that will motivate some money to flow into those small cap stocks. And so that's where I think the opportunity is in the broader market. So to summarize then, tech stocks that related to AI, these large cap tech names, have really propped up the market indexes. And most stocks haven't kept up with these indexes. The broader market has sort of been suffering. Now, we saw some profit taking, and I think that could touch off a little bit of selling pressure in those large cap tech, but money should flow into the broader market. And so I don't think a general market crash is coming, because most stocks really haven't done that well. It's only the overbought tech stocks that are a concern. So my ratings then on US large cap and NASDAQ still remain bullish on both time frames, but it looks like we could start to break down. So that could change next week. Small cap Canadian and gold, bearish in the short term but neutral in the long term. Oil and US dollar, bullish short term and neutral in the long term. Bitcoin, short term bearish. We're seeing some selling pressure building there, but long term neutral. And then bonds, bullish in the short term. We're trending up, but still neutral in the long term. All right, let's look at the trade of the week now. This is a stock that we picked up in the Stockscores active live service, which we run every day. You can learn more about that at stockscores.com. And when we're day trading and swing trading, we're always focused on the very abnormal liquid stocks. We just put our attention on those because that's where you get the best return for your dollar. And we have some indicators that look for abnormality, looking for abnormal volume coming into a stock, abnormal price action. And then we watch for setups on the short-term chart. So here is MBIO, which earlier in the week started trading very abnormal volume. So you can see from one day to the next, the big spike in volume. It gapped up. I never like to buy stocks that make a big gap. I like to give them some time to build a base and then break from a good pattern. So it built a little base here and had its first break there. The reward for risk potential at that point wasn't great. It was better to wait for this little pennant pattern to form and this break right here. So that was the ideal entry point. And you saw the stock move up. Again, goes parabolic. When parabolic trends get broken, much like we're seeing on NVIDIA right now on the long-term chart, here you have an example of that on a very short-term chart, a 1-minute chart, where the parabolic trend was broken and that led to some weakness into the close, and that was your sell point. So hopefully some of you were able to take advantage of that stock. I know that on our active live service, that was one of the hot stocks of the week. I hope you've enjoyed this week's video. If so, click on the like button, subscribe to the channel if you're not already subscribed, and we'll see you next week. Trade well.